Good morning. It's Sunday, August 13, 2023, and this is my chart prep for ES futures for the week starting November 13. Okay, so right now I see that price has gone up. It's on an upward trajectory at the moment into institutional order flow. So let me see, it has not taken out the high of April. It did take out August 2022's high. It took that out on June 1. So June of this year, the candle for the month took out August. It's a market structure shift to the upside because it is the high to the low that broke September 2022 low. So it looks like price wants to come down into this monthly fair value gap for a possible turnaround to go higher because it did not take out any of the highs to the left. No, this won't be an engulfing. So yeah, right now though, excuse me, long term into the monthly fair value gap, down into a bullish fair value gap, busy to go higher. Short term, moving down into the busy. So that's where we are with that. Actually, let me leave that line now. Let's go to the week. Okay, this is the week. Open that back up. There we go. Week is the same thing. Order flow is bullish. Short term, bearish. It disrespected the fair value gap created the week of July 10. It did that the week before, July 31, first week of August, last week of July. Totally disrespected it. Price came down, broke that low and closed lower into a order block. Let me see if it has already traded and closed below 50% of this order block. Open this up. Shouldn't be any guesswork here, hard to see. Okay, so it did trade down to the 50% of the order block, but did not close below it. But it did close below the candle that disrespected the fair value gap. So I still see lower prices, again, into a monthly fair value gap. So this low, this is my first draw on liquidity here. I would say for next week. That's the draw on liquidity, which is the week of July 10th low. Then we have June 24 week low, and I'm thinking ultimately this weekly fair value gap. Oh, turn around. Let me measure the price range. See where we are with that. Not at equilibrium yet, so I'm going to mark equilibrium of the current weekly price range. Well, really, when you look at it, this is the current price range, which we closed lower than 50%. Next price range closed lower than 50%. And then price range 50%. So I'll put equilibrium. So this is weekly price range equilibrium. Go with current week price range equilibrium. Let's see how price treats that. to draw liquidity lower. 4-hour. $4,395. Okay. 4,395. Shit. That's powerful. Okay. Yeah. Short term, bearish until it gets to where it's going. Right now, this is the delivery, 4-hour delivery. So let me change that, because what do I see here? Consolidate, expand, reverse, retrace, deliver, retrace, deliver, retrace, deliver, retrace, deliver, retrace for delivery here. And put this here as internal. Deliver. Internal. For our deliver. And then I suspect a retrace for delivery here, and eventually to at least the equilibrium of the price range, weekly price range. Did I go directly to the 4 and skip the day? I see a reaction on the day of this busy. See it traded down. Now the next candle is important. If the next candle comes down, opens, seems like price is still going to go down, because it should open. Let's see what happens when it hits the high of Friday's candle. If it pings it, it's going to come down and continue towards the internal 4-hour. If it gives me a green engulfing, it's going to go up. But I'm sure I have the wick. Turn on. It's powerful. I don't have the wick of that. I don't have 50% of that wick. On Thursday, identified. Really? You sure don't. Okay. Let's identify 50% of Thursday's wick. Price could retrace to that sometime next week, Tuesday or Wednesday, create the high. I don't think it'll do it on Monday. No news. Okay, so let's see. I think Monday is going to be a bullish candle. Tuesday or Wednesday will set the high. Has to draw liquidity Tuesday, Monday, Tuesday, Wednesday. So equilibrium. It's the equilibrium of that daily wick, which was Thursday's. So Monday, Tuesday, Wednesday, or Monday, Tuesday, Wednesday, Thursday, Friday. So we shall see. Okay, I saw that on the 4-hour as well. I wonder if I have that marked already. No, I didn't. Okay, and then 1 hour. 25, 29, 25. Is that it? Let's remeasure. I think I messed that up. No, that's right. Okay. 1 hour. So what do we have here? Ping the, let me see which fair value gap this is. I don't have it. Maybe it's an hour fair value gap. Sure isn't. 4 hour. Nope. A day. Daily. So let me name this to avoid confusion in the future. So it's a day. Let's see. So on the hour, we already shows where it traded down into it. Came back up. Yeah, it's going to come up to the high. Trading towards the high. Friday's high. We have a fair value gap up here. See on the 4 hour? It's not on the 4, but it's on the 1 hour. Okay. So we'll watch this and highlight that. Monday. Down. Okay. And then go down to the 15. Let's see what we have on the 15. Yeah. Consolidate, expand, reverse, retrace. Deliver, retrace. Didn't deliver there, but it did eventually deliver here. So retrace, deliver. So now what do we have here? Consolidation, expand, reverse. That's the breaker structure. Retrace, deliver. So we have ourselves a little reversal. So higher prices, that's what I'm looking for. Monday, Tuesday, at least. Bullish on Monday and Tuesday. So I'll put a little text here. Monday and Tuesday equal bullish. Thursday equilibrium. So we're looking for buys if we do decide to engage price. Looking for buys. Can we go back up to the 4 hour at least? And see what I have in group 1. I shall leave that. I shall leave all of my stuff because it's necessary. Jesus. Ooh. Go back to the 5 minute. Very necessary. Okay, and there we have it. Mm, powerful. Okay. Okay, so that's my outlook. Bullish Monday and Tuesday up to that's my draw liquidity. I don't know if it's going to go up there because there's a fair value gap in the way, but that's the draw liquidity up short term.